Good morning, Brandon Carrera here in my latest version of Did You Know? Mortgage rates go flying with the highest jump since 1987. Still, housing prices may keep on rising. Don't fret, don't fear. I just want to point out some quick things so that you can be informed in this marketplace. So when the consumers go and your client talks to you, you're ready to go. So here's the deal. If buyers want to pay the same monthly payment as at the beginning of the year when rates were about 2.5% lower, they'll need to look for a lower price home. Senior economist with the National Association of Realtors. So, if again, just to read that quick bullet point one, if folks wanted to pay the same mortgage payment as the beginning of the year, they need to look for a lower price home. Okay. So here's the important part. So, from Freddie Mac, these higher rates are the result of a shift in expectations about inflation, right? Higher mortgage rates lead to moderation from the blistering pace of housing activity that we experienced out of the pandemic. So, as you know, Mr. and Mrs. Agent, yet the market remains tight. If you're shopping for a house right now, you haven't seen prices come down. So, this is the key. I thought that this is the key from this moment. Prices may keep going up for a while, even in a world when rates are up. Federal Reserve Chairman Powell, that was my Marco here, who's on my desk on my origination floor, and we're getting all the dings right because people are asking questions. Um, so the intent for Chairman Powell is this: we need to get back to a place where supply and demand are back together, where inflation's down, low again, and mortgage rates are low again. That's the silver lining of what we're doing right now. We need to get back to a place where supply and demand are back together and where inflation's down low again and mortgage rates are low again. So the intent of the Fed in raising all these rates and doing this is purposefully driven, as we know in the industry, to reduce inflation. That's number one. But the second part is that they intend to bring pricing down. So here's what you need to be thinking about. Number one, create a pool of buyers because the Fed is on that side of the equation, trying to create lower prices, so create more buyers. So you as an agent should be creating a buyer pool. We're helping all of our agents by contacting their past clients in order to ensure that if they want to be in the market, we're helping them out. We're being a value add to our agent partners. Now, on the sales side, if you got a listing right now, know that the market's against you or there's winds against you. You may still be able to sell that property, but more and more you're going to find that concessions are going to start appearing, buyers are going to come out, and the intent of the Fed is trying to bring down those prices. And that's a short-term pinch, right? So they want to bring prices down to moderate so buyers and sellers can trade at normal prices. And we would normal defined as what a a buyer and seller are willing to pay in a normal market, right? So I'm going a little long-winded here just to tell you that don't fear, right? You should be doing two things. A smart agent in this market is building a buyer pool because prices will come down to meet them. So you should be doing that. The second agent, if you've got a listing, should be advising your sellers, hey, listen, the Fed is coming against us, so let's prepare for that. Let's get ahead of it from incentive basis. What are we going to offering buyers to buy today? And how we're going to make this listing appear to be the most magnificent listing in the market, even though we have scarcity, but also make buyers want to reach for it. So just be you got to be very you got to be a pro in this market. And if you're getting this email, you're absolutely one of the pros. So thank you. God bless you. Looking forward to working with you, Brandon Carrero. And of course, I have to do this by law. Brandon Carrero, NMLS 314143, equal housing lender. And I wanted to share this with you. Shoot me an email back, connect with me, because I would love to connect with you on the next steps, how we're preparing, and how I want to help you be prepared for what could be a difficult market in the next 36 months. This is going to end. It's not that it's forever, but let's plan. Let's plan right now so that way you're winning in any market. Take care. God bless you. Bye bye.